Hi, Happy New Year and welcome to the first Q&A for 2021. I hope all of our friends and our Aussie expats scattered around the world were able to enjoy some parts of Christmas and New Year in some kind of semblance of normality, and we're certainly all hoping for a much better 2021, and I think that may actually come to pass. So let's look on the bright side of things, remain optimistic and see what Santa brings us this time in next Christmas 2021. Let's start with some questions, and as usual, we get some really interesting questions, and some of them tend to revolve around certain topics. So this time we've had a few in relation to some of the things that I've put out about how can I be a first home buyer in Australia as an Australian expat whilst I'm overseas. And one question sort of, I guess, embodied more than one thing at one time, where we had the situation where this person wants to know, how do I do that? How do I become a first home buyer? But then also, how do I only pay 10% deposit? And then the second part of that question was, what about if my partner is not Australian? So let's look at all these things, because as always, a simple question can become far more than just a simple question. And as often also happens, the answer is it depends. So let's look at this, let's look at this and try and break things up a little bit so that you get a better understanding of what to look for and what to think about, from a strategic viewpoint when you're looking at potentially perhaps employing a strategy like this. So you're living offshore, and obviously you want to get some of the benefits that have been created by the Australian federal and state governments for first home buyers. And the majority of those really relate around the first homeowners grants, the money that state governments will tend to give to first home buyers or homeowners, and also the concessions on transfer duty, or stamp duty as it's known, in relation to acquiring a new home that you're going to live in, which is new, or in some instances which has undergone substantial renovations, and this varies from state to state. So it's quite intricate, and as always, the information you're receiving is general in nature, and you need to actually contact us or your advisors or both in relation to your specific set of circumstances and goals that you have to make sure that you're on the right track. So let's look at it, because depending on which state you're looking to buy in, it's going to be a different outcome for you. So let's sort of go from the top down first, and let's have a look at how do I do this to start with. You've got to look at the eligibility criteria. So to be able to access, say, the first homeowners grant, you need to be an Australian citizen, or you need to have Australian PR, or you need to be a spouse of someone who is an Australian citizen or has Australian PR. Let's look at all of that, I guess, in context, because I'm looking at this more from an expat's viewpoint. So it's simpler if you are an Australian citizen, and we can then look at other, I suppose, aspects that you need to fulfill. Some of them are pretty straightforward. You've got to be over 18 years of age, you've got to be a natural person, you can't have owned a home or property in Australia that you've lived in beforehand. You need to move into this property within 12 months of completion or settlement, and you need to live in that property for a minimum of 6 months on a continuous basis. So let's look at all that, and then perhaps sort of zoom backwards and say, okay, this is only going to work for some people who are Australian expats. Now, that's the bottom line, because you need to be able to, I guess, work with this time frame, and that's why I've got timing up there, is so important. So let's say you're living in Hong Kong or in London, doesn't matter where you're living, but you've got a definite plan in mind. You're going to move back, let's say, in 2 years' time, and you want to buy something now that you want to live in then. You've never owned any property in Australia that you've actually lived in as a home beforehand, and you'd like to perhaps access this, this free money essentially that you're being given as a grant, and potentially also be able to save money on transfer duty if you meet some of the criteria that are associated with that benefit. So how does that work? Okay, the way it will work is if you're going to perhaps buy a property now that is currently going to be built. So you're buying something off the plan and you're paying a 10% deposit to the builder. So that's the 10% component, I suppose, dealt with on an upfront basis. But then you've got to also make sure that this property is going to be built in, say, 18 months' time, so that it completes, it settles, so then it's actually ready for your occupation in terms of residing in it, and it also meets with your plans in terms of repatriating back to Australia in that sort of given time frame. And as I said, you've got 12 months from settlement to move into the property, so it gives you a fair bit of scope to work with. Some of the stamp duty concessions are temporary at the moment, so again, this will vary, and that's why you need advice, and as I always say, it depends, so we need to look at these things more closely. But overall, it's something that's eminently doable if it fits in with your plans. And clearly it's going to assist you in terms of the amount of money, the amount of capital that you need to put in to buy this first home that you're going to move into. So it's somewhat exciting in many ways. And let's have a look at some of the perhaps more granular portions of that. Generally, the first homeowners grants are state-based, and most of them are about $10,000 as a lump sum. But they can go up to $20,000, and that's for regional centres in Victoria at the moment. Some of the states base theirs differently in the territories, so we won't cover all of that because that's, it becomes confusing. So if we talk to someone on an individual basis, we can then delve into what state they want to buy in, etc., and work out the numbers. But it's important to also just recognise that this grant can be paid at different times in different states. So don't rely upon it as being part of your deposit, if you like. And in this instance, in any event, you're paying 10% deposit, so you've got that equity already available. But it gives those people an opportunity, I suppose, because some people don't have all the money that's needed. Now, if you need 15% deposit, you can pay the 10% now and save up the rest over, say, that next 18-month period. If we look at the stamp duty concessions, as you can see, this is only in relation to new homes, so you're going to build or buy a new home. New South Wales, it caps out at $800,000, Victoria $600,000, Queensland $500,000, and WA $430,000. There are some concessional components for small areas above that, and it really makes a bit of sense because properties, generally speaking, if you look at, say, Sydney, Melbourne, Brisbane, Perth, tend to be of a value differential. So it kind of, I guess the government's looking at it and saying, well, we've got to take some sort of notice of that to help people with that. But the other important thing to look at is, how do we maximise those potential benefits as an expat, as a non-resident? And what about if, as many people already said to me, what if I already own property? I've got an investment property, back home. Well, it's interesting because, again, depends on the state, but in most instances, if you've owned investment property in Australia but have never actually lived in that property, then you could still qualify for a first homeowners grant, which is pretty interesting. You've still got to meet all those eligibility criteria, so the timing is very, very important, and you've got to be cognizant of the fact that that timing really needs to pretty well then be sort of set in stone. This is not for someone who just wants to go out and buy a property and potentially look for freebies. So it's all got to work in terms of the whole situation as it pertains to your own position. But let's look at what else we can do. And I'm just going to take an example here, and we'll pick a state. It's Queensland. So if we again go through this thing, the criteria are the same. You've got to be an Australian citizen or spouse thereof, or PR holder. You've got to be over 18 years of age. The interesting thing is that you've got to buy there in terms of property-wise a new property to maximise, as in most states, to maximise these benefits. There are some benefits for established property in terms of stamp duty concessions, but if you want to get the maximum from this, you need to either build or buy a new home and, you know, preferably fall under those, if you like, guidelines in terms of getting a full exemption for your transfer duty. So in Queensland, you must move into this as your principal place of residence within 1 year of completion, and that comes after practical completion, occupation certificate's been issued, the property settles, and you've got to live in that for a minimum of 6 months on a continual basis. So it's not really, you know, it's not onerous, I suppose, depending on your situation. So if you have had discussions with your employer or not, but you've decided that you want to go back in 12 months' time, in 2 years' time, whatever that time frame is, and you know that's what you're going to do, then you can plan around that. If you don't know what you're going to do, this may not be a strategy that works well for you. So if you look at that, I'll come back to this person's situation. Let's say you're going to buy something for $750,000. You can come up with a $75,000 deposit, which is 10%, so you would pay that now. And then the extra 5% you could save up fairly readily over the next 18 months, if it took 18 months to complete, at say $2,500 per month. That would give you the 5% plus some other costs, obviously, that would be involved, hopefully not much in the way of stamp duty, if any, to try and get a full exemption. So you could make that whole thing work. Now, the other part of that question, though, is because it came from the same person, what if my partner is not Australian, it's British in this instance? Well, as far as being a first home buyer and potentially accessing the first homeowners grant and, if you like, some transfer duty concessions that may not make a massive amount of difference. However, what's underlying that is obviously I'd like to use as little capital as possible, perhaps because I still need time to save it up. So the real question then becomes, am I still eligible to receive the same kind of loan on the same terms? And the answer is no, you're not. So in this situation, if one of the parties is not Australian, then the number of lenders that will lend to you, it becomes far more limited, and you may need to come up with a 30% deposit instead of 15%, as I said here earlier. So it changes the whole dynamics of the situation and may not be suitable at all. A potential workaround would be to go ahead with this sort of situation just with the Australian citizen being the party who's purchasing this property. Again, you'd need to get some more advice, because some states may say if you're buying this as a couple, as a principal place of residence, there are some other criteria hidden within that you need to comply with. So as I always say, check things out thoroughly beforehand, but it's not straightforward then. So this is what we've got to look at, and you can't have your cake and eat it, I suppose, is where I'm coming from. But in many instances, you could really get a pretty good solution here if you're able to find the right property to match what you're planning to do in any event. And up till December in some of the states, we even had people that were able to get the home builders bonus from various state governments, because they found properties that complied, that were starting, that they were able to sign contracts on prior to 30th of December. So there are different things at different times that you need to really be cognizant of, but most of it then relates around how are you going to complete this transaction, how are you going to get your funding put in place, and that's really, I suppose, the bottom line, because as this question here, question 2, the person said, well, how can I borrow 85% without paying LMI or lender's mortgage insurance? And that's an easy one to answer. You've just got to be a client of ours. We have special arrangements with certain banks and lenders that allow clients of ours to borrow up to 85%. on properties without paying lender's mortgage insurance. So that's a lot more simple to deal with than some of these other things, and you don't need to fulfill any sort of onerous criteria, except obviously, as in all situations, you have to be able to service the loans. And these days it has been getting somewhat better in relation to banks dropping their floor rates, so people are starting to again be able to borrow a little more than they were last year, and we've been seeing that sort of come through on a gradual basis, and it really is a help for many of our clients, because property markets in fact haven't really gone down in Australia over the course of 2020, apart from Melbourne, which has not been a massive decline anyway. So what's happening is that prices aren't actually coming down, so people still need to borrow sufficient money, but what's been stopping them before have been serviceability constraints, and that's now starting to loosen up. The banks are being told to become more proactive in their lending practices. Responsible lending laws have been changed, if you like, or I shouldn't say relaxed, but it is becoming more possible for you to borrow more funds to get the home that you want to buy than we've seen over the last, say, 12 to 18 months. And I think that'll continue. But with the advent of the cheap rates that we have, you know, the low rate environment that we're in Australia, if you then move there, you know, you could borrow at the moment 4-year fixed rates for this property that you're going to live in at 1.99%. Now, that's as cheap as I've ever seen it. And so what happens, of course, is that people can borrow more, and it puts somewhat of a floor under prices, especially for quality properties in sought-after areas. We have, you know, so many clients that say to us on a constant basis, "Oh, look, I don't know what's going to happen," because they keep missing out on the properties that they're looking to buy. So this is also pretty good in relation to that, because it forces you to actually buy a property, put in a deposit, and you know you're buying at today's price, effectively. Even though the settlement may be in 18 months' time, you know what you're paying for that property. So you know also what you're going to need to borrow, so you can work on the numbers as they stand now, looking at your current incomes and working with that. Obviously it doesn't overcome all eventualities, but certainly most of them. So pretty important, and I think, you know, if anything, we should never be driven by bonuses or things that potentially could sway us to make a decision, because at the end of the day, especially if you're a first home buyer, the important thing is, you know, it's got to work for you. It's got to be the place that you actually want to live in, and then if you can get these benefits on top of that, you're obviously going to be in a far better position. All I can say is, look, as always, it depends scenario. Please let us know, as you have done, and with the clients or people around the world that have contacted us, we'll be booking one-on-one Zoom meetings to go through their personal situation and see if it's actually possible for them to go through with something like this and plan it out as a strategy and put some constraints around it to make sure that you don't have any real issues when it comes to the other end, and you're going to settle that property and then hopefully move into it in the near future thereafter. So look, this is the first Q&A for the year. We'll be having a pretty big event from our viewpoint anyway, and also from yours on the 14th of January, so next week, where we'll be going through in far more detail a look at what's happening with all of the markets, the capital city markets, the regional markets around Australia, and quite a few other interesting issues that many of you have said would like some more input on. I look forward to seeing everyone then. Hope you've enjoyed this, and if you've got any questions, if someone wants to stay on the line, more than happy to. I can answer those, or otherwise let us know and we'll just book in some personal Zoom time on a one-on-one basis. All the very best.